As reported Tuesday, the annual inflation rate was 7.1% for the 12 months ending November of 2022. And the markets loved what they saw. With this slightly lower level, investors see the Fed winning the fight against inflation. However, that's old news. According to Morgan Stanley, U.S. stocks are in for a world of pain in the first quarter of 2023. Mike Wilson of Morgan Stanley said investors need to shift their attention away from high inflation and the Federal Reserve. Instead, investors need to focus on the looming decline in corporate earnings. Tomorrow's news, according to Wilson, is ongoing profit margin compression and the looming decline in earnings power. According to data from Bloomberg, the average 2023 earnings per share estimate for the S&P 500 is $215. Wilson sees $195, and that's not yet priced into the stock market. Wilson said that only one-third of the index has seen 2023 earnings estimates fall more than 10%. This leaves plenty of room for estimates to be cut further, and the downward revisions have only just begun. With Wilson's big earnings decline, he also sees a big decline in the S&P 500, with the index falling to as low as 3,000 in the first quarter of next year. That would be a decline of about 24% from current levels. Now, the silver lining to Wilson's bearish market views is that this is the final chapter to the current bear market. It's just no one knows how long this chapter will last. For an answer to that, let's go to the charts. We're now looking at a 20-year monthly chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this is a pretty good proxy for the Nasdaq. We're taking a look at the Nasdaq just for a change of scenery here. As you can see, we topped out there in late 2021. We came on down here. We hit 40. We're now at 44.27 with Tuesday's close. Now, a 24% decline would bring us somewhere down in the 33 range, and we'll mark it right there, more or less. You get the idea. So that's still a pretty good drop from even 40, but even a bigger drop from 44. Do I believe that? No, I don't think so. I think we could probably test that low that we've made here earlier, perhaps even go a little bit lower. As you can see, we've had these stair steps on the way down, and I would say another stair step on the way down is possible. I don't know if it's the probability, but it's possible. For the probability, let's go take a look at the other oscillators. Volume's not going to show you anything, but here the MAC does. We've been talking about this time and time again. You're tired of hearing this, but the separation between the fast line there, which is slightly under the zero line, and the slow line here, that separation leaves a lot of room for volatility and perhaps some downward movement in the market. So be careful. Here in the histogram, again, very low, very negative. We are improving, have been for the last 3 months, but we still have a long way to go before we get to that zero line. And that means we could always have easily another downturn that would bring us testing the previous low or perhaps even lower. There's lots of room for that. So don't be impatient. Moving here into the price rate of change, same thing. We've got a nice bottom occurring here with the fast line moving up. Still a small separation between the fast line and the slow line there. But again, this is going to sawtooth its way up, but it could sawtooth sideways for a while because it's still weak under that zero line. Moving here into the relative strength, you can see that we've been sawtoothing sideways for a while. That can continue for another quarter, at least maybe a little bit longer. Into the stochastics, as well, pretty much the same thing. It is a good sign with that fast line just barely touching the slow line. It can come on through here, but once again, it's going to take time, months, before it gets to that 50 or midline perhaps. Moving into the Williams, same thing, a lot of sawtoothing going on down here. It looks like it's got this fishhook and maybe heads back down into that oversold territory between that negative 80 and negative 100. But once again, it can mark some time moving sideways. Now, back up here to the price chart, we'll take one last look at the potential of moving down to 33. Once again, I think that is a possibility, but not the probability. Probability, I think, revolves around this 40 level here. We could go down to maybe like 38, something around there, and bounce around sideways before we finally do get a bottoming and basing. But I would agree with Wilson that we are going to enter the last stage of this bear market, and it's going to be into the first quarter of next year and maybe a little bit longer. We'll have to keep watching, but for now, there is plenty of room for sideways movement and volatility. Be patient. Stack the cash. You can make yourself rich if you practice discipline. And for today, that's ChewDog Charts. Thank you.